Students and working accountants, welcome to my Export Tally Prime YouTube channel. My name is Babrao from Hyderabad. Today, in this video, we are going to learn the interest calculation with advanced parameters balance. That is, advanced parameters. We already two parameters we completed. So the balance two parameters and advanced parameters we will learn today. So before entering into the topic, I request you. So many students they are entering the channel just watching the video and going out, but they are not subscribing. So I request everyone to subscribe to the channel if they have not already done. Already the previous one. Okay. Otherwise, all those who have not yet subscribed, please subscribe the channel and click the bell icon next to the subscribe button and select all. So you will get notification for all the videos which I upload in my channel. And also share my channel with others. Okay. And there is one more very important thing here is don't skip the every video in the middle. Watch every video till the end. If you skip the video in the middle, you will learn the topic up to that point only, and after that the balance topic, the balance part, the balance subject, you cannot understand. It will be like half knowledge. It will be a waste of time. Okay, so you watch till the end. See here, when you go to the college for the academic qualification, BCom or BSc, for that qualification, we sit in the college every day. We sit at least for 2 to 3 hours. But here we are learning the professional software, that is Tally Prime professional software training academy. Okay, so you have to spend the time for this definitely. So at least this video will be, any video will be around 40 to 50 minutes or maximum less than 1 hour. So you have to spend that time, you have to watch the video till the end so that you get very good knowledge for this topic. Every topic you will get a good knowledge only if you watch the video till the end. And then after watching, if the video is good, please like the video so that the YouTube people will share this video to many people, and then all the other people will, the many people can learn this topic. Okay, now we will enter into the topic. So here, in this case, so already we have completed this one, interest calculating company. In this, we have done some parameters, that is simple parameter we have done, and in the previously we have done 4 parts. That is the first part, simple, all the simple parameters and simple interest for loans. Second one, simple interest with simple parameters in the case of debtors and debtors. And the third one, simple parameters only with simple parameters calculating compound interest for loans given by us or loan taken by us. And the fourth part, the calculating compound interest with simple parameters, compound interest for buyers and sellers, that is sales and purchases, or buyers and sellers calculating the compound interest. 4 parts we completed, and the 5th part we have we have done 5th part also. In the 5th part, advanced configuration. So calculating the interest with advanced configuration. In this advanced configuration, there are many options in the advanced configuration. So in that, we completed 2 options. That is, I will tell you. Yeah, if you go to this is the simple configuration, simple interest. All these are advanced configuration. Here, if you see here, after this, if you go to this, you will get this is the third one. See here, if you come here, so if you show 4 options. So date of applicability we completed. The second one, the date of applicability we can use always as well as past due date also. Always or past due date you can use. Okay. And in the case, second one is in the case of date specified during entry. In this case, we can use only, we can use always. So we cannot use past due date. So we use always, and always we will take up, and in this case we can give the parameter, you can give the different dates as well as different rates like that. We are giving that. So here, first I gave 2% first April from the beginning to 30th April, then 3% from after 30th April, from 30th April to 31st March, 31st to May. That is 30th April means from here to calculate first April means to calculate from the next day. It will not be added. So second April to calculate. So from 30th April means the next day. From 1st May it will be to 31st May. And after that, so in every case, the normal rounding, give it 1. That will take up. And in this case, next one, 4%. 4% we are taking, that is date specified. So we are giving from 31st date is taking means it will calculate from the next day. And we can do the 2 days. We can do the again the 2 days. And again we can do some other rate or some other period. But here, the 44%, 31st is the starting date and the ending date is not given. That means from this date to any date you select. Here 30 to 31st April only this percentage. Here 4% and the 2% is only 1st April to 30th April. This 4% is from 31st April to any period, whatever period you select, whatever from 1st April to up to May, June, 31st May means the 1st June, June ending, July, August, September, whatever time period you select, it will be calculated at 4% with this method. So, like this, we have completed the thing. Now, what we do is here, we can see the interest rate. Interest rate, how you will see? See here, from here itself, you can go. So, the gateway of tally, you can go to data, display mode reports, then statement of accounts, then interest calculation, then ledger. You can go to this. So after 4 steps, we are reaching this step. Instead of that, what we can do is see here. After completing the entries, so we are making the entry. No, after completing the entry, after accepting the entry, okay, this entry is accepted. After this, again, so directly we can go the same thing here. You can go up to you can go to this button. So go to interest calculation. You type interest, you will get here receivable and payable means all the debtors or creditors total list you will get. But if you go to ledger, debtors list will be displayed. Whatever debtor you want or whatever data you want, you can select. So here, see here debtor, only one person is there. There is list is there, many persons for whom we activated interest, not all the data. Only those to whom we activated the interest, the list will be displayed. Whatever data we want, we can select. So this is the one answer. Here we can calculate the interest. See, 1st April to 1st July, for example. So this is the thing. And details, everyone, for every interest, we want details, enter. You click enter, that will again you have to come here, again you have to instead of that, all the details you can get a Alt F5 or Alt F1. So if you click, you will get the details for all the things. So this is advanced parameters. The second one, the date specified entry. So next one is so for date of applicability we can use always or past due date. For date specified during the entry, we can use always only. And the third one is due date of invoice or reference. For that we can use both always as well as past due date you can use. So the third one we will take up now. Now we will create another voucher. We will create another voucher. So for the same date, and what you will do from here itself, you can do create voucher. That is making the entry. Create voucher the same date, that is 1st April only. Same date, you take up paper computers, accept, sales, and you will take up here. How many numbers here? 9. I'm sorry, HP computers you will take up. HP, you can take up HP computers. So HP computers select, selling to 25 only. Accept. Now, here new reference, and here after accepting this, you will get the parameters. So this is that parameter. So the first line, the simple parameters. So we don't need one. If you want, we can change. We are not going to change anything. Now here we are going to the third option. So third option is sense we select always or anything. The third option is date of application. Date of invoice, the due date of invoice or reference. That we can go. So here for that you can select always or calculate. First we'll take up we'll select always and we will select this due date of invoice. So due date from due date we need that and here rounding method. The rounding method is normal rounding limit 1. Here they are given always and here it is due date of invoice. Due date of invoice or reference is given. So if you select here always, so there will be no days here. From due date if you take here if you say if you take past due date and if you do some dates, generally these dates will be taken. But here due date of invoice. So here if you select always, if we select always or you select past due date and these dates, this will not be taken into account. Due date of invoice means, so due date, what is the due date here? So here, if you have given any credit days, so after the credit days, the due date after completing the date is the due date. From the due date only it will take. Past due date, after the due date, if you do some period, that will not take. So we are all we are giving. I think due date of the invoice you are taking. That is why it will calculate from the due date only. So here, no credit period is given. Invoice date itself is the invoice date is the due date. Okay. And if you do some days here, so that will be taken, that will be added to the due, added after the number of days will be the due date. Here we will not do anything. Here, what is the due date is April 1st. Okay. So we are not giving any number of days. That means April 1st is the due date. And then here we are giving always you take always and then here take due date of invoice, then accept. That is the normal rounding 1 accept. Okay. And then accept this also. Then go back. Then escape. You see, this is the thing 50,000. So we have taken due date of the invoice. That is due date of the invoice. So due date is 1st April. 1st April is the due date. That is you calculate from the second. Because adding that a date adding you have given no, isn't it? That is why it's calculating from that. So from first July, you can take it from 1st April to 1st June. So it will calculate up to April to June means this is April to June. That is, even if we do any date from 1st to April, whenever is whichever is applicable from that date only, it will calculate. Okay. So 2nd April to 1st June. So if we take 1st April to 1st August, if we take, so it will calculate 2nd April to 1st August. 1st April to 1st August means first date will be excluded. It will not be added. Then it is not added, it is not directed. If it is added, it will be directed. Okay. So it is not added means second is taking. This is the third type due date of invoice. So if you select this, see here, if you select this in the last one, no. If you select this, what I have given here, we are not given any date. So here we selected past due date, then always we selected one mistake. If you select always also, always it will not take, it will calculate from the due date. Here if you select past due date, due 10 days, past due date and due 10 days, and accept, come back. Even if we do past due days after the due date 10 days, even if we do, the option calculating method is due date of invoice. That is why whether you select always or past due date and past due date and do some days, that will not be taken. It will take from the due date only. That's why it's calculating from this only. So I'm working here. Now we have given after this, we have given 10 days past due days. Okay. Before that, if you give here. For example, 5 days you have given here. 5 days. So due date is from 1st April to 5th April. 6th April is the due date. Okay. And here we have given past due date 10 days. So actually I have to do that 5 days and 10 days is the parameters past due date, any number of days, are always that will not be taken only from the due date of the invoice only will be taken. If there 1st April, then we give 4 days, 5 days. That means 6th April is the due date. That means from 7th onwards, it will calculate. This days number of days will not be taken into account. Okay, see here. So 1 plus 5, 6. So 6 is the date, 6 is the due date. So calculation will be from next day. Accept the invoice, and then come back. From 7th it is calculating. So 10 days, past due days, 10 days value, that will not be taken. That will not be taken. Only from the due date. If no credit period, credit days are given to calculate from the bill date. That is from 1st April means from 2nd April onwards to calculate the interest. We are given 5 days. So 5 plus 1, 6 days. 6th April is the due date. So from the next day, that date will not be added. So 7th April, it is calculating. Suppose in the credit days, if you do 10 days, so 1 plus 10, 11. So from 12th onwards, it will calculate. Past due days, 10 days or 5 days, that will not be taken because the option is due date of the invoice. That means you will ignore the always or the past due days. If you ignore, this will be. Okay. So this is about the fourth one. So for this one, here, the fourth option, here we can give or not. If we give, it will not be taken. If you don't give, it will take from the date of the invoice as the due date. And here, if you take due date of the invoice, it will take, and it will ignore the past due days, number of days given, or always it will select, whatever it may be. That's why it is only, we can select only always, because here we can select past due date and give a number of days, 10 days, or any days. It will not be taken, that will ignore the due date of invoice, the option. That is why this is from the due date. That is the dispatch due date. It will ignore. So this is this one. So next one, you see, next one is effective date of transaction. So what is that effective date of transaction? So come see here, accept, and then come back. Okay. And now the invoice date is now we have taken is all the dates we are taking. 1st April only we are taking that date. That is the date of invoice. Now we will take up another one for the other option. Now again we will make a voucher. Create a voucher means make the entry. If you want to see the entries in the ledger vouchers means vouchers entered in the ledger. That one. If you want to make any alteration, alter marker will go. So here make voucher and the same date, same party, accept, sales, and then anything you can take. For example, you will take Dell laptop, 2 numbers, so 25,000 each, and then here, the option which you are going to take is see new reference. The option which you are going to take always and effective date of transaction that we are going to take. That is why that we have to make one alteration here. So go back here. Go to the here. What we do is we have to make some alteration in the voucher type. That is what is meant by the effective date means when you are selling, we will send the goods to the buyer. That is our customer. We will send the goods. So we make the invoice on 1st April, we will send the goods. 1st April, we made the invoice, we raised the invoice. Then something happened, there was some delay to send the goods. Or you send the goods immediately, but to reach there in the other way, there may be some problem due to some reason. So the goods reach the customer after some time. In such a case, if we give some credit period, so by the time the goods reach the date period, credit days may expire. Or if you are not able to given any credit period. So from the date of invoice, if you take the date of invoice as the due date, and if you charge interest, they will not agree because the goods have not reached them. So before that, from the date of the invoice, they will not pay interest. That is why what we have to do is the day invoice date is the date on which we raise the invoice and send the goods, and the date on which the goods reach there, that will be considered as the not due date, actual due date. From that day onwards, afterwards only he will pay interest. So up to that date, he will not pay interest. After that date only, he will pay interest. That is why that date, even though April 1st, that is the first one is the, even though the date of invoice is different, that from the date on which the goods reach the customer, and from that date onwards, only the interest will be calculated. So that date is called as effective date. So from that date or date only, the dates will be counted. That is why it is called as effective date. So in this case, we have to make alteration in this. So we are showing the only the date, that is date of the invoice, and here itself we have to show the effective date also. So here now we can make changes here. First of all, we have prepared this one. We sent it the invoice, and then it has not reached there. So that date we have to change here, go here, and here alter master, and you have to go to voucher type. So what is this voucher? Sales. So go to sales voucher. In the case of purchases also, go to purchase voucher, and here you see this one, see, after this. So go down, and after this, use effective dates for invoice, for vouchers. Effective dates for voucher, what means purchase voucher or sales voucher. Yes, make it yes, and accept. So then come back, and here you see automatically this is the invoice date, and the effective date is given. So here what we are, how we cannot change here. So previously the date we can change, but we can type and change, but here we cannot do. So go press F2. So voucher date, effective date. So 1st April is that, because we press F2, is showing the second day, next day. Take 1/4 the invoice date. For example, the goods reach after 10 days. Here, in the case of education version, it will not take first and second only will be taken April, and the other dates will not be taken. May, in the case of May, the date can be taken from May, 1st or 2nd or 31st will be taken. So here, if you reach it after 10 days, we can do here 1st April to 10th April. 10th April, the effective date, we are giving the date. Okay, but in the education mode, you cannot do. That's what I do is here. 1st April, you get, it will not take so much time, but anyhow, it will take a month because it reached after 1 month. Because other days, so 4, 5 days, 6 days, 10 days, we cannot do. So if you do 1/5, that means the effective date is 1/5. The interest will be calculated for the purpose of interest calculation. This day will be taken after this date only, from this date only. So there will be no credit period or anything. After this date only, the interest will be calculated. Okay, the interest will be calculated. Okay, now accept, come here. So always, and you take here effective date of transaction. Even if you do, okay, I will tell you later. Okay. So effective date of transaction is taken and come, don't do the due date to any date, any period that will be calculated the same date. Check normal rounding, limit 1, accept. Then come back, escape. So here, so second to first to we have taken 1st May. So 1st April is the invoice date, and the effective date is 1st May. So 1st May means that will be not added. From next day, see, from 2nd May onwards, it is calculating. We have taken April to August. If you take April to 1st to July, for example, so it will calculate 2nd May to 1st July. Okay, see, it is taking the effective date. Okay, so in this case, the last one. In this case, even if you 10 days, that is So this is the first May is the effective date, not invoice date is one. First step. Effective date is 1st May. If you do 10 days, it is showing due date is 11th May. Due date is 11th May. Okay. Keep it. Now here, if you take always here, or even if you take post due date, suppose again you have given by 10 days here. That means totally 10 days there, 10 days here, or it is not given there, only here, or it is not given here, only the 20 days, where it may be. That 20 days also should be taken. But here, we are giving net effective date. So in case of what is called date of invoice, even if this is the number of days, this will ignore. Ignore, it will take from the date of the invoice. That is, due date of the invoice means either the invoice date or the credit days given after the due date, that will be taken. So this will be ignored. But here, the days given there, because this is effective date is different date after some time. That's why the effective date is different. That is why even if we do what you call always, or if you give cash due dates, you give some days, or in the voucher, like the bill weighted days, the what you call the credit days also give. All this will be ignored. The effective date is 1st May. Effective date is here. Effective days only will be taken. These 10 days, they will ignore. The 10 days or 5 days, whatever days, given in the bill weighted days, credit days, that will be ignored only from the effective date of transaction will take. So accept, yes, then come back, escape, see. Even if you do 10 days, the credit days given as well as due date given, all this will be ignored. Just like due date of invoice, but due date of invoice is in the bill wage details, we do the credit days, that days will be taken. But past due date after that, if you give the days, that will be ignored only from the due date, April, due date means either the invoice date or the date after completing the days given, that is the credit days given, that will be taken. If you ignore that, what you call past due days number of days, it will ignore. But in this case, effective date, both credit days will be ignored as well as credit days will be ignored as well as past due days after past past due date, number of days, those will be ignored directly from due date, what you call effective date of the transaction only will be taken and it will be calculated. Okay, this is about the interest. And after that, just like all these, we are learning all the methods. We will use only one method. So if you use any one method, so if you use this method, we get this interest. Use this method, this is the interest. For this method, after all these completing this one, what's your right? So this is the total interest. For this is that like that, we will complete that, we get the interest. Any one method only use, and you will get the interest, isn't it? You will get the interest, and just like the previous simple interest and compound interest, after that, after the calculating method, calculating date, that is first July, you have to transfer this interest to the ledger and we have to receive payment from him. In the case of debtor, transfer to him to the debit note, interest receivable. We have to receive interest receivable to the debit note to the debtor account. We will transfer, we will receive the payment. In the case of seller, we purchase the goods. The seller or supplier is a creditor. In that case, the party will be a creditor and the interest will be paid, that is interest payable, and the interest is payable and is the creditor, and we have to use credit note is a creditor, we have to credit the interest, transfer the interest to the party account, the creditor through credit note. To credit note, simple interest only. So we'll transfer that. After transfer to the party, the interest will add to the first principal, the ledger balance amount, ledger amount it will add. The total amount. In the case of debtor, we will receive the money, receipt voucher. In the case of a creditor, we will make the payment, we will enter the payment voucher. That's what it is about that. This is the interest calculation. So simple parameters, simple interest, simple parameters, compound interest. Now simple interest only, advanced parameters. So there is advanced parameters. I will write in the advanced parameters. There are four options. Date of applicability, date specified during entry, then due date of invoice or reference, then effective date of transaction. All these methods, any one method we use depending on that event. Okay, like this, we will calculate the interest. So this interest calculation, particularly this what we call advanced parameters, it will be a little confusing. You just take one and see the video, watch the video two or three many number of times, and also you take one example like me. Take one example, take one entry for data, make the calculations. Take one entry for purchases. In the case of that sale, the creditors also use the same method. You get like that. You practice. You see the video many times, more than many times, this two or three times, and then make the practice with some your own example. So that practice you can see many times, 4 or 5 times you make. Then you will understand. You get the full knowledge of interest calculation. Okay. And with this, I close this, and tomorrow, next video, we will take some other topic. All advanced topics only we will take. So with this, and we close the, so all the best to you, and good night.